G'day there viewers, and welcome to the final chapter, Trial Balance. Let's get started. Chapter 12. We're following Osborne books. So let's look at the objectives for today. Look at a trial balance. What is it? Look at some example entries. Look at some what is inventory, how is it recorded, and looking at capital and revenue expenditure. So we've got accounts in the general ledger. They may be balanced before they are transferred to the trial balance. So trial balance basically is an extra check, it's an extra report. So you do a list normally at the end of the month, and it has a list of all your balances. And we're looking at manual accounts here, so the trial balance would balance if all your accounts are balanced correctly. Now obviously with a computer it does it automatically, but yeah, so if you're looking at manual accounts, then you want them all to balance before they go to trial balance, and if the trial balance balances, then it's an indication that you've done it correctly. It's not 100% certainty, because you can have compensating errors. Maybe you made two errors that exactly balance each other out, but yeah, it's an indication that you've done it correctly. So balance is just a list of the trial balance is just a list of all the accounts that are in the general ledger, and it's produced monthly normally. Other companies may do it at different periods, but normally it's monthly. So let's have a look at this. So what you can do now is stop the video and then see whether you think these are debits or purchases or credits. Sorry. So purchases, that's an expense. Is that a debit or credit? Well, it's an expense, so that would be a debit. Sales, that's is that a debit or credit? Well, it's an income, so that's a credit. Trade receivables, well, this is an asset. It's something that we own. We own the money that is due to us, so that will be a debit. Trade payables, that's something that we owe, so that's a liability, and that will be a credit. Insurance, that's an expense, so that will be a debit. Rent, that's an expense, so that will be a debit. Wages, that's an expense, so that will be a debit. Bank, now that can be obviously debit or credit, but normally there's money in the bank, so that's normally a debit, but it could be a credit. Office equipment, that's an asset, so that's a debit. Delivery vans, that's an asset, so that's a debit. Capital is the money that we owe to the owner, so that will be a credit. Now inventories is something that is reviewed every 6 or 7 months, and then it's included as a line, and it's in the trial balance, then it will be a debit normally. Let's have a look at the answer. So inventory is a debit here. So let's carry on. So inventory is valued in the business regularly, can be annually or maybe half annually, and the value is recorded in the accounts as an asset. Let's carry on. So capital or revenue expenditure. Expenditure on items that will be used over a number of accounting periods is called a capital item, such as a car or buildings. Expenditure that is used for day-to-day running, e.g. wages, rent, or stationery. Obviously stationery, you will use it over a number of periods, but because it's so small, then we count it as a general revenue expenditure, because it's day-to-day running. It's too small to be basically depreciated. Depreciated is spread the cost over a number of periods, accounting periods that is. So which ones are these? Are they revenue or capital? So the cost of a 30,000 building extension, do you think that's capital or it's revenue? Well, that will be capital, obviously, because it's an asset that we're going to be using over a long period to earn profit, so that will be a capital item. Includes 100% of repairs to current building or repairs, that's an ongoing expense, so that will be a revenue item. A plot of land is bought for £20,000 plus 750 legal costs for land, and that's always a capital item. It's always going to be used over a number of periods. It never runs out, so it's always capital. Businesses own employees are used to install air conditioning, and the wages are £1,000 and the material are £2,000. So this whole £3,000 amount will be capital expenditure, even though with wages normally is a revenue item. Here it's used to install a capital item, and any cost towards capital item are capitalized. So this will be £3,000 altogether as capital. So own employees are used to repair and redecorate. So repairs and redecoration, that's a revenue item. Sorry about the spelling mistake. So own employees are used to repair and redecorate. So repairs and redecoration is always revenue. Let's carry on. Let's have a look. Right. So capital income, sale of assets, loans from the bank, cash injection. So these are all examples of capital income. Revenue income, sale of goods, rental income, commission received and discount received. Okay, thank you for listening. This